this might be big picture. We're joined by Moody's Capital Markets Chief Economist John Lonski. FBN's Deirdre Bolton is here, and the Layfield Report's CEO John Layfield has a little sense. Instead of being in our New York studio, John, of course, as usual, is in Bermuda today. It's good to see you all. And maybe we should start with John Lonski. It's on the Economist side of things today to just give us a little size and scope. Sometimes we overdo it with stories like this, and then sometimes we look back later and find that we didn't do enough of it. How big a deal is Turkey?
I can't help but think that the markets are overdoing it regarding the situation with Turkey, especially in Europe. Germany's DAX is down by nearly 2%, and yet I've yet to come across many stories telling me that German banks have a great deal of exposure to Turkish debt. But Turkish debt is very important in this case.
Okay.
Turkey's foreign currency denominated debt, dollars and other currencies, amounts to more than 50% of Turkey's GDP, according to the IMF. And that is its big problem at this point in time. There's a lot of worry as the Turkish currency sinks.
Yes.
It becomes all the more difficult, costly for the Turks to make good on their outstanding debt obligations denominated in currencies other than their own.
I mean, there's no doubt, Deirdre, this is a big deal for Turkey, a huge deal. The question today, we're all, as John says, we're trying to get our arms around it, is how big of a deal is it for the rest of us, whether it's Europe or here in the United States?
You do see fear showing up in the market, right? You have 10-year treasuries, strong bid there. You have gold rising. You have the dollar rising. So there's all these kind of, okay, even if the U.S. isn't perfect, it's certainly, in a comparison point, the cleanest dirty shirt in the closet, right, as we like to say. I do think it's a little bit overdone, but in the larger context, it's not as if only Turkey is the only issue that could eventually rattle investors, right? We've been talking a lot about this back and forth with China.
100%.
So I think it's one piece of the puzzle. And when you talk, I love what you said, where you say, you know, sometimes we look back and we think, oh, that was the moment to panic that we didn't understand. There are a few puzzle
Let me get
parts.
John Layfield in on this. I'll come back to John Lonski as well. We have two Johns here. I might have to go last names, go Layfield, Lonski, and Bolton. But your take, Layfield, on this is what? Because, you know, Deirdre brings up an interesting point. I was talking to somebody else about this this morning and said, well, you know, if the Chinese trade situation doesn't rattle us, certainly Turkey won't, size and scope-wise. What do you make of the market reaction today?
I agree with what John and Deirdre both have said. The biggest exposure right now is it's not the German banks, as John pointed out, but it's also the Spanish banks. Have about $80 billion loaned to Turkish banks. France is second with $35 billion. The biggest problem right here is not necessarily the tariffs going on the steel. They're the sixth largest exporter of steel in the world. It does hurt their economy. The biggest thing is the falling lira. The lira is falling over 40% this year because oil is dominated in U.S. dollars. They import about $38 billion. That's up 37% from 2016 to 2017. It's up now going to be more than that because of the falling lira. They can't afford this right now. It looks like Turkey is going to be headed toward an IMF bailout, which, by the way, as the biggest funder of the IMF, U.S. is going to borrow money from China to fund the IMF for a bailout that we caused because of these tariffs.
How about that? John Lonski, it's sometimes currencies do have a sneaky way of kind of sneaking up on us and becoming a bigger issue than, say, some sort of other crisis would be. I don't know if this will be the case.
Yeah, and again, this is especially true with those countries that have large current account deficits or large trade deficits that have a crying need for foreign currency if they're going to pay for their oil, as the other John just stated.
Right.
You know, one of the takeaways from this is that perhaps we ought to pull back our expectations as to where interest rates are going to peak in the United States.
Okay.
My goodness. We have a 10-year treasury yield that can't spend any time above 3%. Home sales are weakening, softening in the United States. We have, again, the 10-year treasury yield can't spend any time above 3%.
Yeah.
Yet we see the dollar strengthening, and we have these problems overseas.
So where do interest rates?
I think you're going to find the federal funds rate is going to top off. Perhaps it's something well under 3%, maybe around 2 5/8% later this year.
What would that mean, Layfield, if Lonski is right about that? We'll come back to you, Deirdre. But what do you think of that, about the implications for interest rates?
I think that John's right, and I think he probably is. I think that's great for the economy. Look, any president who came along, whether it's Miss Clinton or Mr. Trump, was going to face a rising rate environment, which hurts the economy. The tax cuts seem to have mitigated that effect. And so this economy right now, I think the interest rates are going to be fine. The whole problem right now, the only black cloud really is not Turkey. It's the trade war with the rest of the world.
Right. I want to talk about
trade war.
Yeah, I want to talk about China in a little more detail. Lonski's chomping at the bit here, Deirdre. I don't know who wants, but finish your thought.
No,
Deirdre,
I go ahead. and I agree with that. And I think there's really no denying the fact that we've gotten carried away with some of these forecasts on the interest rate front. We recently had a CEO of a global financial institution claim that the 10-year Treasury will is headed to 5%. That's nonsensical. That's way over the top.
Little much. So then, before we get to China, and that's our next topic here, because I think Layfield's got it right, and that is the issue, the larger macro issue. We hope, not hope, but think longer term would be China. It would just make sense that it would be, unless somehow this situation kind of spirals out of control and becomes bigger than it really is.
Yeah, and I sort of feel like the 50 billion, so sort of the 34 to 36 that have already been put into place by either side, and then the rest that's coming in the next 2 weeks, right? We said the $16 billion bounds from each side, I think is very absorbable, right? I feel like when it becomes, we've heard President Trump say, maybe we'll just start putting tariffs on all imported goods, which is about $500 billion, and that's very different than
that's
50
the days
billion.
that the market gets thrown off when they have trouble interpreting what the president means by that. There's an interesting kind of point on all of this. There are off-ramps that all of these countries have. I mean, in Turkey's case, they could take the exit ramp by probably just releasing this pasture, right, that Blake was talking about, and maybe that calms down markets and calms down everybody else. I mean, and whereas with China, as a look at the American pasture that's been held for a couple of years, I'm not sure what the off-ramp is for the Chinese, and then maybe they hold out longer. I don't know.
Yeah, they're going to be holding out maybe a little bit longer than we anticipate, and that's partly because they know there are midterm elections coming up, and the closer those elections become, perhaps the more the Trump administration might quiet down as far as imposing tariffs that could prove to be very disruptive, first to financial markets and eventually to the economy.
You talked also about the products, right, that the Chinese have actually put tariffs on, which were strategically chosen to essentially bother President Trump's voters. Soybeans, and you were out in those fields. That's a $20 billion export for us, our most important one. So they are choosing where to put those.
I want to make one other point on this Reuters story that came out, which I think was kind of interesting on the Chinese, that there may be some sort of cracks emerging in the leadership in China, that there may be some, John Layfield, back and forth in the Communist Party where some inside the party, according to Reuters at least, are unhappy with Xi Jinping's leadership, although he's still firmly in power there. The implication, John Layfield, would be that, hey, maybe the U.S. is winning this trade war after all, and they have more to lose than us, which we've heard before. But what do you think is actually happening?
I think exactly what you're saying is happening. Look, Mr. Xi has got a real problem right here. You know, when the U.S. sent over their delegation to try to work out this trade deal, the Chinese papers were all saying, don't deal with the USA bully. So he is under political pressure, even though he is the forever chairman, to get this One Belt, One Road initiative passed, this Made in China 2025 passed. He is in a real bind right here. The Chinese economy was hurting before these tariffs, so this has not come at a good time for him. But I'm not sure, Colin, that's the best point is, where is their off-ramp? What can they possibly do to get rid of this trade war?
Chinese, what is it for China then, John? How do the Chinese save face, as they would say in this situation? Does the president give them a way to do that and still claim victory on his own end? That's how this would all end, right? Is that what you're saying?
The president brags about his negotiating skills, and he has been good. He wants to give them a victory, and give them a victory saying, okay, we're going to pull off this trade tariffs. We're going to allow now U.S. companies to come there and not have to store their data in servers in China, and to have 100% ownership, which, by the way, China just did with BASF, a $10 billion plant that they put into China. So there is precedent for this. For a German company, China could do this and also save face. I think that's the win-win.
Okay, that's interesting. Thanks to all you guys. We appreciate it.